Welcome to AM Daily Crypto. I am your host, Sander Coin Miner, and today we're going to go over some news courtesy of Crypto Potato. As always, do your own research, and don't forget to like and subscribe and hit the notification bell if you like our content. And let's get started. The first one up today is the Market Watch, courtesy of Crypto Potato, and the author named Jordan Leonchev. Shows here Bitcoin has remained stuck around 21,000, while most altcoins have produced minor daily declines. As you see right here, Bitcoin's trading roughly about $21,309, and Ethereum at $1,185.35 as of today, July 10th, 6:55 a.m. Pacific Standard Time. This week's resembles quite a lot of the previous one, as there are little to no substantial movements in the crypto market. In other words, it's quite boring. Bitcoin has stalled around 21,000, while most altcoins are just slightly in the red, as trading volume has plummeted to a monthly low. Those retail investors must be running out of money. Bitcoin sits tight at 21K, as last weekend was coming to its end, including Monday, which was the national U.S. holiday. The primary cryptocurrency went on the offensive and spiked to 20,000, and it took a few attempts, but it finally broke above the level and kept charting new heights in the following days. Thursday saw the significant price increase as BTC jumped just shy of 22,500. This became the asset's highest price level since mid-June. The bulls were expecting another leg up at this point, but failed, and Bitcoin retraced by a few $100s. Yesterday it dipped below 22,000 and now sits at just over 21,000. It's worth noting, though, that the overall trading volume slumped yesterday to its lowest levels in just over a month, according to Bitcoinity. Well, it's the bear market. What do you expect? Next one, this might be interesting, by Antonia Isaishi. I hope I butchered that, but I apologize. This one is Tether liquidated an over-collateralized Bitcoin loan from Celsius without risk. Tether did not reveal the USD value of the liquidated loan, but said it was completed with no risk to itself. Yeah, there's a lot of that going around. Tether, the company behind USDT, the largest stablecoin by market capitalization, revealed that it liquidated Celsius position without risk to its reserves. Wow. In a press release on Friday, July 8th, 2022, Tether stated that beleaguered lending platform Celsius took an over-collateralized loan from the company denominated in Bitcoin. The stablecoin issuer said it has since liquidated the loan based on the agreed up to terms of the transaction, according to Tether. This process was carried out in a way to minimize as much as possible any impact on the markets, and in fact, once the loan was covered, Tether returned the remaining part to Celsius as per its agreement. Celsius position has been liquidated with no losses to Tether. The statement also mentioned that the firm had some investment in Celsius, and though it did not state an exact amount, Tether assured that it represented a minimal part of its shareholder equity, according that it did not impact the company's reserves or stability. Yeah, they've been saying that. Tether's latest update comes as Celsius is experiencing liquidity issues. Yep. As earlier reported by Crypto Potato, the crypto lending platform repaid its final debt of $41.2 million in DAI to Maker, causing a release of 21,862 wrapped Bitcoin worth approximately $450 million. Celsius's former asset manager also sued the firm on allegations of fraud and market manipulation. Well, a lot of the manipulation, it's rampant. It's rampant. Let's move on to our next one. This one is by Jordan Lyanchev. Accumulating Cardano ADA ahead of Vasil upgrade. Sharks added $37 million. Whales stopped selling. Oh boy. Although the asset's price has remained relatively calm in the past few weeks, medium-sized ADA investors have added almost 80 million of the tokens in a month, reveals on-chain data provided by Sentiment. The analytics company categorizes the different types of Cardano investors, separated into groups from 10K to 10 million in colors, and almost all have been disposing of their assets since February. Whales, holding between 1 million and 10 million coins, dumped the most, especially since the mid-June crash occurred. However, they all have reduced the sell-off significantly in the following weeks, as Sentiment noted. Here's the chart. As you can see, not selling as much. At the same time, smaller ADA investors, dubbed sharks, between 10,000 and 100,000 tokens, have resumed accumulating by purchasing just over 73 million ADA in the past month or so. Given the asset's price, as of now, shy of just 50 cents, this amount equals 37 million. Speaking of price action, Cardano's native crypto went from over 65 cents to below 45 cents during the mid-June crash. It bounced off and challenged the 55 cent shortly after, but failed and currently stands at around 50 cents, as mentioned above. This latest accumulation comes at an intriguing time for ADA, and especially the blockchain project behind it, as the community expects the Vasil upgrade to be implemented soon. Input Output Global, the entity behind Cardano, postponed the hard fork in June. Although the new date has not been released yet, the Vasil update went live on the Cardano testnet on July 3rd. DeFi Llama data shows that the total value locked on Cardano has taken a hit due to the ongoing bear market and declining prices. It's down to $125 million from $350 million earlier this year. Yep, people were liquidating. Gotta pay themselves. I got one last article here from yesterday that I found interesting. It was by Dimitar Zanzarov. It talks about U.S. government officials holding crypto prohibited from working on industry policies. American government officials are banned from participating in federal crypto policies if they hold cryptocurrencies or stablecoins, the OGE stated. The United States Office of Government Ethics outlined that cryptocurrencies and stablecoins do not qualify as publicly traded securities, according to the agency's regulations. As such, it banned individuals who privately own digital assets from participating in federal policies that could affect the valuation of such tokens. The OGE's recommendation. It is in its latest legal advisory, the OGE explained that government employees who own securities could apply for the de minimis exemption and resume their duties if they do not surpass a certain threshold. I wonder what that is. However, since the agency does not classify cryptocurrencies as publicly traded securities, workers will not be allowed to take part in federal regulations and policies if they are hodlers. As a result, an employee who holds any amount of a cryptocurrency or stablecoin may not participate in a particular matter if the employee knows that the particular matter would have a direct and predictable effect on the value of the cryptocurrency or stablecoins. It is worth noting that the legislation applies to all government officials. Does it really? Including those working at the White House. Wow. And the Department of Treasury and the Federal Reserve. On the other hand, employees may participate in specific governmental affairs in which they have a disqualifying financial interest from holding in a mutual crypto fund operating under the necessary supervision. In addition, workers may get involved if they are actual owners of the funds. The OG explained that mutual funds focused on cryptocurrencies and stablecoins should fit the bill for sector funds. Mutual funds, with a stated purpose of investing broadly in companies that would benefit from use blockchain technology, on the other hand, are considered diversified funds. The OGE said that sometimes identifying the nature of particularly mutual funds or particular mutual funds, it is not an easy task. In such cases, the agency vowed to thoroughly observe the entities and look beyond the fund name to the prospectus to analyze their functions. And now we will look at government officials who own crypto. The digital asset universe has emerged as an intriguing niche for numerous U.S. politicians and officials. Such example is Senator Cynthia Lummis, who is a longtime Bitcoin holder. She entered the ecosystem in 2013 when the asset's price was around $300, while last summer she topped her stash up with up to $100,000 worth of the asset. Other politicians, part of that club are Senator Pat Toomey of Pennsylvania, Senator Ted Cruz of Texas, Congressman Mark Green, and Congressman Michael McCall. Well, ladies and gentlemen, that's just a couple of names that own crypto, and I'm pretty sure there's a lot more than that. We can't be, this whole article about prohibiting from working on industry policies. I mean, personally, and there's going to be people working on policies that have crypto. That's just, it's prohibited, but when a lot of people are holding cryptocurrencies that work in government, then who's going to do these policies if all the members have crypto? Do they? I don't know. That's just personally what I believe. But anyway, that's it for today for as far as the articles, and we appreciate you listening in. And as always, do your own research. For heaven's sake, do your own research. Do not just take anybody's word for it. Do your own research. Check, verify, and don't forget to like and subscribe and hit the notification bell. If you like our content, if you like my content, let me know. Comments down below. Let me know if you like me doing the AM Daily Crypto, or you like Cryptolissa. I want to know the truth. Just tell me the truth. You're not going to hurt my feelings. Just let me know. All right, everyone. Everyone have a good day, good afternoon, good night. See you on the next one.